Good morning, everyone, and welcome to the PivotBoss pre-market report for Monday, September 10th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll notice is that price has pulled back as we expected here in the first week of September. The pullback occurs right to the pivot range here, which again is an opportunity for bulls to defend for another shot of strength to the upside. Again, that's the general nature of this market. Pushing higher, comes back early in the month and pushes up again off that pivot range, pushes up again, and here we are again for another shot higher. Now again, the farther you get down the road on this uptrending market, the more likelihood of the chance that one of these pullbacks does fail. But at some point here, again, it's got to make a decision. Either we continue higher, or perhaps there will be some failure that leads to another round of weakness back down. Again, the key level that we're trying to watch here is 78.5. That 28.78.5 is the top of the larger key range from earlier in the year here. And again, that's the major level. If price cannot maintain acceptance above that zone, we will likely drop right back down inside the larger range. So again, this is going to be a very, very important zone up here. If bulls can keep this price bid and take it through highs, we could extend this move even higher. The next major upside target would be 29.65. 29.65 in terms of the next key range target. And then based off of the monthly low, we have 29.82 and change. That could be the next primary upside target, in addition to the average range target at 3,022. So again, we are at the edge of the larger key range, and this is a very, very important part of the chart, because if there's any failure to get going to the upside, this is when we make the move back down into the range. So again, we're at a very, very critical juncture here in the chart for the ES, and we'll continue to watch here to see if price can remain above the 28.78 half key level. All right, let's take a look now at the NQ. This one has had more of a pullback here recently. Tech has been outpacing. A little bit more pullback has occurred, and this one is the one that's really, really interesting, because price actually closed below the previous month's midpoint, and that is very, very significant. Typically speaking, price will not close below the midpoint unless it's headed back toward the previous month's low price. That's right there at around 72.14 half. That's been a very, very important key level here. So again, we have a current short-term downtrending market. The level that we're watching here in the trading room is 7,500 evens. That's a big time level there. 7,500 even was the resistance level on Friday. It was support on Wednesday, when offered through that level Thursday. So it's a big time level here. And you can see right now inside day, as price is approaching 7,900, currently at 74.79. If there's any rejection here, that could open up more weakness. So keep an eye on 7,500 early on. Any failure to get above that zone could lead to more sideways and maybe even down action. So keep an eye on 7,500. Now taking a look at crude oil, you'll notice crude oil is up on the day about 0.5%. This is after we had a significant rejection, failing to hold above 70, failing to hold above 71s, an aggressive sell-off, and we've been seeing weakness ever since, but we have not hit the next downside target at 66.30. That was the next major level to reach, and then you also have the 64.32 as well. And so the thing to look for right now is the previous session's high price. Price was well above it here in pre-market trading, and now starting to reject that area. So if this is a failed new high that is developing in a downtrend, the likelihood of new lows is very, very good into 66.30 at the very least. So again, keep an eye on the previous session's high. Right now, starting to see initial signs of failed new high, which would open up more weakness. So the key level to watch is going to be 68.08, 68.10. Any failure to hold above that zone could be rather significant. So watch that level as we continue onward throughout the day. If we take a look here at gold. Now gold futures is sitting right on 1200. This has been a pattern that has been developing for a while now. We had a pretty strong rejection here. It pushed higher pretty nicely, but really has not really gone anywhere since then. It has been developing in a range, and you can see right here after this initial run, a pullback and bounce, a pullback and bounce, a pullback. And so you can see bulls are trying to keep this area bid for a shot at bouncing this thing back toward 1240. Now, the only problem is if these bulls don't get paid, the downside sell stops will come out. You have these bulls here, you got those bulls, you got these bulls, you got bulls coming in, sell stops below. And so if there's any failure to hold 1190, that opens up a retest of these lows and perhaps a drop below 1170 for another dip. So again, keep an eye on this zone. We're tightly coiled. At some point here, I imagine, we will see expansion out of this range, and it could be pretty decent in terms of size. About, say, 70 handles, something like that. So we could see a 70 handle breakout move one way or another once we start to see expansion from this range. So we'll keep an eye on that. But right now, 1190, the big level, continues to chop around 1200 at the moment. Lastly, taking a look at the YM. The YM has been holding at highs. We've seen a fairly nice rally ever since we got this pullback into the pivot range. That was a great move up, and now price is sitting here very, very quietly within a very narrow range at these highs. So after the recent rally, you can see right here, price has been offered at the previous month's close. That's that blue dotted line. This is the current month's low, and you can see it's a very narrow range. So we really don't have much range over the last 5 or 6 days. So if we come down here and say, let's put on a 6-day range, you can see very, very narrow down here in terms of range, and that is significant because that tightly coiled price action, as you can see here, doesn't stay that little for long. I mean, that's usually about the time where you see an increase of volatility at some point. And so again, is the volatility going to be released to the upside, to the downside, or both ways? Sometimes if price comes up here and rejects, then it could go both ways, up then down. So again, we are at the point here where we're likely going to start seeing an increase of volatility and an increase of price range out of this narrow compression in the YM. Again, any failure to hold, say 25.8, could open up weakness back toward, you know, the 25.3s or maybe even lower 25K. So this zone right here is very, very important, and overall bulls want to keep that area bid for a continuation higher. All right, that is it for now. Let's see how this plays out heading into the new week of trading. Good luck and trade well.